keeping it simple, which is always a good idea because it's pretty complicated, is to look at the direction, the vector of these two cycles, growth and inflation. Growth is okay. Inflation is not a problem, writ large. Okay, I see problems underneath for lower income families, but there's no inflation running away. So there's a green light to be easier on a cyclical basis on that score. And if there was easier policy on that score around the inflation cycle not being a problem, that's pretty good news. That's kind of, you're moving towards Goldilocks, right? Growth without inflation. If the Fed was like, hey, we're easing because there's a ton of job losses, that's a different story. But we don't see that right here.
So the markets, we were just 2 weeks ago, arguably 100% chance of a rate cut here in December. Now we're down to about a 25% chance of a rate cut here. Is that just a function of Fed folks' rhetoric, or because we haven't seen much data one way or the other? Maybe today will tell us
look,
story.
we never went in for this driving in the fog stuff, right?
Okay.
Because we see what's going on with our forward-looking data, which is not just reliant on what the Fed or what the government says. And we've got a very rare situation of cyclical growth firming in the forward data and a massive structural investment boom, which you're seeing. You guys are talking about it every other day or every day practically, which we haven't seen, and we don't see that combination of a cyclical to the upside on growth and this structural lift on growth very often. It's been 25 years. Now, these stories, these booms can end badly, right? Booms can often bust, and you can look back to the dot-com boom and say, that could have gone a little better. But right now, there's no stumbling on growth, and inflation's not running away.
The reality is
but the plutonomy is there.
Well, but folks, this is serious stuff. Arthur Burns was a mentor to Jeffrey Moore, who reinvented cycle research. I was weaned on this as a child. Economic Cycle Research Institute was forced reading at 6 years old. The bottom line is we have a disparity of pain in this country that Jeffrey Moore and Arthur Burns never dreamed of. What does a Fed do given this mass plutonomy that we're in? You're the number one person I know on this.
They are boxed in. Where they're boxed in is on the wealth effect. So the top 10% of people with people in this economy own or spend over 50%. They're over half of our consumer spending, top 10%. So how are they doing that? They're doing that because the assets are inflating. And so it's perfectly fine for them to go out and spend, and they're doing it with abandon. Everybody else who doesn't have assets that are inflating are very exposed to goods inflation, where non-discretionary spending inflation, where there is some. When you add it all up, discretionary, non-discretionary services, it is overall still easing. That's why I'm saying there's not an inflation problem. But underneath that lower leg of the so-called K-shaped economy is under a great deal of pressure. The Fed's in a box, right? Because if something happens to the market, it's not a prediction, but if something happens there, then that wealth effect, which is driving this resilient outlook, gets wobbly very fast.
All right, like 99% of our viewers and listeners, I had to go to Google and Google plutonomy, and Google AI overview tells me it is the economic theory where an economy is dominated by a wealthy elite, which brings us to our K-shaped economy in this country. Has it always been there, or are we just talking about it more over the last decade or so?
The modern version of this. Look, has there always been inequality? Absolutely. Yep. Look, I mean, we can go back, and I think we were looking. Plutarch was writing about this 2,000 years ago. Okay, and it gets bad if the lower leg of the K is really upset.
Yep.
And we're not quite there. Okay. Now, in the current situation, this came up in our writing, Tom, back when Yellen was taking the chair. Okay, she was asked about this, and she warned that families without assets could very suddenly, this is in 2014, could very suddenly end up off the road. And the encouragement, when asked, what do you do? The answer, and it sounded funny in a bad way, was you should accumulate assets. Now, I don't know how you do that if you're in the lower leg of the K. It's difficult to accumulate assets if you're using your entire paycheck to pay the bill.